Okay, so let's have a look at the trading screen first, see what that looks like. And it doesn't look bad, does it? It doesn't look bad at all. So I think we've put $300,000 in, and we've got $302,000, but we've now got cash of $395,000. There's $93,000 there, which is basically in put income from selling puts. Yeah, so all those negatives are shown as the cost basis down there. That is our income. I don't know, well, they choose to do it because they call it a short trade. But all of that adds up to the money that we have got for selling puts. And as they expire, or as I close them, whichever happens first, then that money will come across to us. So over the coming months, the money will transfer from the cash to the net liquid value. However, it's a constant thing because at the same time, I will be selling more puts, so putting more money into the cash pile. So I call that the cash, the profit reservoir. And we're in the process of building a pipeline to move the money from that reservoir into the net liquid value of the account. So this is where we're at. So if we start at the top, we actually own two stocks. One is Excel, which is a company called XLLSys. I always have trouble saying that. Another one is Viac, which is Viacom. So going across,
Go over there a little bit, right?
we paid on Excel, we've paid $24, and the current price is $17.86. So that looks like bad news. But the first thing is, so it looks like we're $6 underwater. However, we got put income for it when we sold the right for someone to sell us these shares of $4.50. So we're actually only $1.64 underwater. And we've got a very short-term forecast of sort of 23, which we'll get up to that, we'll be well in profit. And value lines say 24 in the next 18 months and $40 in the next 3 to 5 years. So I'm comfortable with that. However, we've also sold the right for them to sell us some more under the 300 at $24. We like these. So we actually did them all at once, put the top ones to us. But what I want to show you is that anytime we feel like it, we can get out of these. So the second one is this Viac, and that looks really bad. We've been sold them for $50, and the current price is only $34.84, and we've got 200 of them. So ostensibly, we're $15 to the wrong side. However, we got $9.65 for making the promise, so we're actually only $5.51 underwater. So if we wanted to, we could now say, just looking at this little calculation here, the amount we've been paid for that, the amount we paid for that stock is $50. So we're $50 down. If we sold them at the current price of $34.84, that would bring some money in. And we've also had money in already, $9.65, the put income. So if we could find new money, $8 worth of it, we would be in a gain position. So I want to try and find $8. And the way I would do that is to sell the share for $34.84. Go to the option chain. Oh, that's nice and quick, and it's buyer. So going out to January, and if we sell a put on this, we get the bid price. So I'm looking amongst these amounts to make sure that we get what was it, $8 odd, and we could actually make a promise at $45 and get $10.50 for it. So if we did that, go back to the spreadsheet. So it was, what was it? $10.50, 9 ahead. That's the principle. But the other thing we've done is, instead of being committed to these shares at $50, we'll now be committed to them at 45. So we've gained $5 in that too. So the question is, why don't I just do that now and put both of these into a gain? And I'm going to explain why. And there's a couple of reasons for it. One is because the prices are forecast by us and Value Line to rise. I mean, the VIAC one up to $95. And yeah, that's a bit longer term, but even so, it means I'm in no particular hurry. But I'm going to show you the other reason. Stop sharing that. Sorry about all the different sharings. Let's have a look. And the one I'm looking for is this. It's called the VIX. So this is a measure of the market volatility. Each one of these, they're called candlesticks. The green ones are up days and the red ones are down days. So we're at the lower end of its range at the moment. So what that means is the volatility in the market is low. And when the volatility in the market is low, the option premiums are low. When it's high, like up here, then the option premiums are higher. So for doing exactly the same thing, you would get more money for it. So I'm happy to wait anyway, because the price is forecast to go up and the indicators on the stocks look as if they're going to be going up. So that's good news. And at the same time, we're on a trend upwards with this too. The option premiums will go up as well. So we can actually take a gain on them at any time we want. However, we want to optimize what we're doing and get the most out of it. Does that sound a reasonable strategy?
So Jeffy, are you kind of, we're just pushing it on?
No, I'm just sat waiting. It's like we're sat here with the money just making its way towards us.
Yeah.
We don't have to take any action. We just have to watch it trundle its way towards us. And at any time we can say, okay, that's it. Let's have some money out of it, please. So we're waiting to get a turn on that. When we think that the volatility has reached its peak, that's when we'll do it.
So I missed it, Jeff. When is the actual option expiry on that stock?
There's no option on that. They're actual stocks that we own. So
oh, okay. Sorry. Yeah,
they won't expire at all.
Right.
They don't expire. We actually own them.
Oh, wow. That's exciting.
I know. That's it. I'm not used to it, owning things like that. So that's, if I go back to the spreadsheet, so that's where we are with our stocks, which they've sneakily put to us. They were due to expire. The Excel one, it was 4 contracts and they were expiring on Friday of this week. And they've put 100 shares to us early, and we've got 300, which as it stands will get put to us on Friday. We could also get out of that if we wanted to anyway, by rolling it forward. We'll have a look at that. I don't know whether we'll do it, but we'll have a look at it. So that takes us nicely on. That's almost a segue to these are the puts that we've got, which are due to expire on Friday of this week. So let's see where we are with them. Excel, we've just talked about, we'll come back to it. MRCY, we are $2.96 to the good. So we will pay $65 for them. The current price is $51.56, and they tend to be lower anyway this week because of expiration. But we've had $16.40 in premium, so we're $2.96 ahead. So, and it's forecast to get up to sort of 78 in the reasonable near term. So happy to go with that for a while. SWI, Solar Winds Corporation, that's a software company, will be paying 21. They're only 16.68, 16.38 at the moment, with 52 cents underwater. So it's not worth pushing it forward for months. I'd rather take the stock and then do what we did with it down there, sell it again and get some extra increment for a put. Same with T. That lives sort of between 20 and 32, 33. It just bounces between them. So yeah, I'm happy that that'll get up there as well. TDS is quite volatile again, but we're only 26 cents under, so it doesn't have to rise much and we're in profit. And VIAC, again, it's the same story. We've taken 200 and they've got another 200 they can put to us. That one we will do something with. So let's have a look now at what we might do with Excel. I'm happy that they're put to us next week, but I just want to show you an alternative. And here it is. So Excel, November 2021, $24 put, got two of them. So if I click on that, it opens up the possibility of the trade, and I can add another option. So the first thing we would do is be buying it back to close it. And the next thing we would do is sell another one, same number of contracts, but for a later date. Let's go to May. And possibly for a different strike price, but we'll try the same one first. It's just getting itself sorted.
Jeff, why did you choose May?
If you look at the months of it needs to. I'm starting with May. If May works, I could come back into February, but it's not. It's likely to take until then to get us a credit, which I'll show you what I mean by that.
Did you look at the graph then to see that?
No, I look at the available premiums. So what I've done, I put May in and I put 24 in. That's my starting position. And it's not telling me. What it should be telling me is that it will cost $6.20 to buy back the promise. And what I want to know is, let's come up now, how much would I get if I then sold that new promise, $24, the same amount, but for May, and it's $6.40. So we would be 20 cents better off, which is not fantastic. We could go further in the future. That's January 2023. That'll come up in a moment. So that will give us a bigger difference. There isn't actually a 24 anywhere there. So when that figure comes up, it's probably going to be lower than 620. So we wouldn't actually get a credit for doing the trade. So that's the first thing I check. That's the best thing we can do. Just push it forward if there's some money in it. We don't actually need a lot of money in it. 50 cents would be great, no problem. $1 is fantastic. And it just rolls it forward. If we can do it like that, where we actually reduce the exposure from a $24 strike price to a 22, even better. But you can see it's come up now. So we'd get $6.24. I would have to pay out $6.20 for buying it back, but we'd only get $5.80 for the next one. However, we would actually save $2 on the strike price. So what that's telling me is I don't want to take a loss to push it forward. So I will go with the first strategy that I described on the spreadsheet, where we'll allow the shares to be put to us, we'll sell them, and then we'll sell another put and get it into an immediate gain. And I'll probably only have to go as far forward as January for that. Okay, so that's where we'll go with that one. The other one that's about to expire that we don't like is, it was VIAC, but they've already been put to us. So So the next thing I want to look at is selling some new puts. And we've got some buying power. We've got about 15,000 of buying power. And we've got some candidates here. So the first one is a company called Vale. And the current price is just under $12. And I'm looking at a $20 strike price, giving it till January, and would get $7.10 for it. So that would give us a very good discount. In fact, 35%. Next one is the airline JetBlue, $19. And for that, we would get $4.40. So that, you know, you see how good the top one is. And then TDS, which is telephone data services. And then American Eagle Outfitters. These are the forecasts for them and also the value line forecast for them. So they're being checked out. The buying power has been checked out. The risk to reward ratio has been checked out. And the company's fundamentals have all been checked out. And this started off, excuse me, on a list of about 20 or 30. So I've narrowed them down, eliminating candidates, many because they just didn't give us a good enough percentage. And even that bottom one is sort of on the limits of my sort of acceptability range. Others because the risk to reward ratio was perhaps not so good, or the buying power they used was too high, all sorts of things. Oh, I've still got people waiting to get in. I better let them in. They've missed a lot. Okay. So we'll have a look at the charts on them next and see if you think we might want to do them. So the first one was Vale. Here it is. So pull that out a bit. So I'm looking at the current price, $11.97, and I'm saying let's sell a promise for 20. That's that level there. You can see it has it's been to that level 1, 2, 3, sort of 4 times before, even since April. So it's not a big thing for it to do. It can get there. And we're looking at a sort of $7 discount anyway. So, you know, we're looking at more like $13, that level that we're paying for it. I'm sure we can get to that level well enough. Are we all right with that one?
Yeah.
Yeah.
Yep.
Good. The next one is, we'll do all these together rather than jump backwards and forwards. The next one is JetBlue. There it is. So JetBlue currently at $14.83, and I'm saying let's sell a promise at 19. So that's this level here. Again, it's been there once, twice, 3, 4, 5, 6 times this year, and the indicators are looking okay anyway for it to go back. If I pull it out even further, you know, it's been there lots and lots of times. No trouble whatsoever at 19. It's like that level there. Okay with that?
Yep.
Righty. The next one is TDS. So hopefully we'll get to a point where someone will say, oh yeah, and have a look at this one as well, Jeff. And then we will. Probably won't do it, but we'll have a look anyway. So the next one is this telephone data and systems. And we're looking at 25. So that's this level up here. And the current price is 19. So I only wanted to do sort of $5.50. Again, if we pull out and look at it in its longer term, we're talking about there. It's been there lots of times. It's well below where it lives. The trend is upwards anyway. More than happy to do that. especially since we get a discount of, what was it? We get a discount on that one of 22%, $5.60. So we'd actually be paying sort of just below where it is now for it. And then everything it goes up by is profit. Okie dokie. And the last one is a Christmas hit. So it's a retailer, American Eagle Outfitters, and they, like most retailers, tend to do better around Christmas. So I'm saying give it until February when we see their results and their money's in for Christmas. And we're looking at 33 to this level. Again, it's spent most of the year at that level anyway. So, and the indicators are sort of heading in the right direction. So I'm happy enough with that. I've got a sneeze. I've had my COVID booster jab this week. I don't know if it could be because of that. I don't normally do sneezes and things. Okay. Oh, there's still someone trying to come in. Right. So we can now go to the trading screen and make some money. So I should also say that on the JetBlue one, we already have some at 20. So, but we don't have enough that it would take us to 5% of our portfolio. So we can top it up, and we can use this opportunity to top it up by selling the $19 instead of the $20, which will give us an average which is lower than obviously $20. So it would be 5 at 20 and 4 at 19, whatever average that comes out at. Okay, so, and I've done these in order of profitability. So we've got lots and lots of buying power. The buying power that we can use, we work out by halving the net liquid value of the account. So that's basically about 150,000, and we've got 300,000. So we're definitely not stuck for buying power. If it's going to take too long, I'll just do one to show you how it's done, and then I'll do the rest afterwards. Here we are. Right, so it is Vail. So we can see they're offering, there's a spread of $8.20 to $9.25. So if we go to $9, let's see, put that in and see where we're at. So we're now negotiating. They're offering $8.20 as a bid, and we probably won't get it, but we're starting at $9, and we'll try and get somewhere in between.
Yeah. Did you say you wanted the strike price at $19?
So that was on JetBlue.
All right.
Okay. So here we are. Price limit, a limit price, which means that we won't accept less than that price. We'd accept more, but we won't accept less. The estimated cost is the wrong way around. So that's what it will actually bring in cash. And then we've got $14.95 as the broker's fee. So let's see how that goes. So they haven't got them. So our negotiating hasn't worked so far. So now we need to go to orders. We get rid of that. We'll get all of the orders come up. And here it is. There are two ways of changing the price. One is just the up and down arrows. But because we want to move in more than 1 cent, we've got to go in 5 cent intervals. Then we got to go to this little circle. This will populate. Now, I'll go down 10 cents, but then I'll switch to 5s. See how far we get. So we now have to wait for this to populate. It won't let me do anything else. So anything, even the 820 is good. Anything above that is even better. And I like to try and get something above the price, the bid price, because apart from anything else, it pays the broker's fees.
I can put it in the WhatsApp.
I can tell you what it is. It's Ale Trail, ALETRAIL, Ale Trail. It was just on a leaflet I picked up so the ampersand 1929. So Ale Trail at 1929, capital A, the rest in lowercase, no spaces.
I think you sent us that already, Jeff, in an email. So
Yeah, I certainly have put it out there. Okay, then the next thing you need to do is up in the top left-hand corner here, you need to put in the account number. And all of the account numbers start with 5DP, 5DP, and in this instance, it's 05715. This will also be on the video when it comes out tomorrow.
I've also popped it in the WhatsApp there as well, so people have it.
Yeah.
Okay, so this is very important for every member to understand this, because there's many moving parts to this account. So the where it says account equity 306,742, that's the encashment value of your account. If you were to close every position and turn it into cash, that's like your net asset value. Bear in mind, this is you only get a end of day reconciliation. So in Alpha Plan, what Jeff was showing you earlier, that can change every second of every day as share price go up and down. But this is just a photograph end of day yesterday. So the next thing you look at is balances on the right hand side there. So the balances is the actual cash. So you've got 395 of cash. And then settled cash is 413, because when you sell a share, you don't truly own the cash until 2 days after you sell it. You sell a share, it's T+2 transaction plus 2 days. And when it's an option, when Jeff collects option premium tonight, we don't fully own that as clear cash until tomorrow. So it's T+1 for options, T+2 for shares.
sorry, I don't quite understand that. Could you go over that again? Because I've got as far as the account equity. I get that. That's if you close the account today. What was the second one you said?
So I was talking about balances on the right hand side there. So you see where you got balances?
That 3951.
Yeah, that 3951. Yeah. And then you've got a trade amount, and then you've got a settled amount.
Right.
Well, settled cash means that if you sell a share, it's only 2 days after you sold it that the cash belongs to you. It takes 2 days for share transactions to clear, and it takes 1 day for option transactions to clear. That's the difference between trade amount and settled amount. Okay.
Yeah.
And then if you scroll down, then on the left hand side, you've got three figures. You've got, just when Jeff can, there you go. So you've got three figures under positions. You've got your value of your equities. Because it's a fairly new account, we've had very little shares put to us yet, but we have had 15 grand's worth of shares put to us. That's your equity value, which is 15,000. That's the value of your shares. The option value is negative 103, and that's what we call the option drag. That is negatively dragging down your account value by 103,000. But we will eventually get to keep all that money, because as and when the options come to the end of their expiration date and they cross the line between before the expiration date and after the expiration date, then the 103,000 will be added to your account value. So your account value is 306, roughly 307 to keep the math simple, and you've got 103. So what you're really worth is 103 plus 307 in terms of your, it's like, if you think of it, if you're in business for yourself and you do some work, you issue an invoice, but the invoice has got credit terms on it. So let's say you got 30, 90, 120, 150 days credit. You don't get paid until the end of the credit term on your invoice. So Jeff has raised invoices for 103,000 over the next November, December, January, February, March, but he will eventually get all that money coming in terms of added to his bottom line account value. It's very important you understand this, guys, because when share prices go up and down, that the account value goes down, the option drag goes up, and vice versa. When share prices go up, the account value goes up and the option drag comes down. So to when you visit this, you can say, yeah, we're worth 306, but there's 100, 103 coming down the track towards us. Then on the total market value is the difference between your equities, the value of your shares, and the negative value of your options. So that's where you get the negative 88,000. And then if Jeff was to click on the margin, if he's to click on balance details, that shows you all the positions if he scrolls down. And the different positions have got different commitments. So under maintenance requirements, if he clicks on that maintenance requirement, main REQ, that he clicks on that, that shows him the positions that are holding the most amount of buying power. So the top of the list there is Vivo. That transaction he did for 5 contracts of the Vivo is currently tying up 9,000 of buying power. So you can see each position he has got a certain amount of buying power. So scrolling down until we find the shares that you own.
Yeah.
So most of it is put.
There they are. There's only 2.
Yeah, so he owns 100 of XL and 200 of VIAC. So the rest is all options because it's early days yet for this account. So if you want to know how much buying power each position is using, he's got 7 grand's worth of VIAC, but it's only using up 1,700 of buying power. So that's about, for every $4 of he spends on a share of VIAC, it only requires $1 of buying power. So different shares have got different ratios. They're
Okay.
all are contributing to his negative option drag. Yeah, back over to you, Jeff.
Yeah. Okay, so while we've been doing that, I got the put sold at $8.30. So that's gone into our money. Stop sharing this. So really, it just takes forever while we're on Zoom to do the others. So I'll do them as soon as we finished here. Having been through, so we actually went through the charts for each of them and the ins and outs of them, Owen, and we've all agreed what we'd like to do. So I'll just do the stuff and send out a note as to what we've done. So has anyone got any other questions or worries or things that they're wondering about or ideas or anything else? Don't be shy.
Still trying to understand it, to be quite honest. So these meetings are a little bit comes through each time. So
Yeah, it's early days yet.
if they're crazy questions, I apologise.
No, there's no bad questions. There might be some bad answers, but no bad questions. But what we're doing is it's pretty repetitive. So we're always dealing with either selling puts, selling calls, collecting dividends, which we don't even see until we get the monthly report, or looking for price appreciation. Other than that, we're managing trades that we've got, either rolling them forward or selling shares and replacing them with new puts. That's all we're doing at this stage. When we get a lot further down the road, we may do some more fancy trades with several legs to them, but at the moment, this is what we're doing. This is what's making us the money, which, by the way, is now up to 398,000. So well, that's with just selling that put.
Yeah. So just think of it, guys, as like it's like a big jigsaw with many different pieces, and each time you come to a meeting, you get 1 or 2 pieces of the jigsaw, and eventually you can see the whole picture. But there's many different moving parts to it. So don't expect to understand it all in the early days. It takes a wee while for all the pieces of the jigsaw to fit into place.
There's no question either. I mean, we had a lot of people came to the live trading back in whenever it was September, I think, and there was a lot of aha moments in the room. People, it clicked for them. If you can possibly join us for the live trading, you should. We've got that's going on in Edinburgh when is it, in Edinburgh, January or February?
12th of February in Edinburgh.
And then in Derby when's that, May, March?
4th, 5th of March.
March, there we go. So there's two. And then, of course, we've got the big trip to the States. We're off to visit the New York Stock Exchange, the Chicago Board of Options Exchange, lots of training in there, and also attending Warren Buffett's annual general meeting. That sounds as if it's in some boardroom. Well, it's not even in a hotel conference room. It's in a stadium. There are 40,000 of us, but no doubt I'll get a seat at the front.
There you go. And we're also going to be visiting the people that write the value line reports. We'll be visiting the Alpha Plan people, the NASDAQ and the New York Stock Exchange as well as doing loads of training as well. So it's a very informative, educational and inspirational trip, because you meet people that have been trading the stock market for their whole lifetime, and you learn from them. You get loads of pearls of wisdom during the trip as well.
Looking forward to it.
Yeah, Andrew's joined us. Yeah, Andrew.
Oh, great, good.
Yeah.
Okay, guys. So I will put an edited version of this out tomorrow, get rid of some of the gaps and what have we. And it will also go on the website as a record of the decisions that we made.
Brilliant. Thanks very much, folks.
Okay, thank you for joining us, Owen. Thank you. Where are you?
Thanks, Owen.
You were trying. Where have you landed?
Thanks, Owen. Cheers.
Bye.
Cheers.
Thank you.
Thank you.
Okay, thank you, guys. Cheers. Bye-bye.
Thank you, Jeff.
Cheers. Okay, everyone. So the meeting's now finished and the Zoom has hopefully stopped slowing the system down. So I'm going to quickly do the other 3 put trades that we agreed during the course of the meeting. And the first one is JBLU. So it's JetBlue. We're going to add the option which is sell to open, and we want 4 of them, and the expiry is for March. Strike price 19, so that's showing 445 by 455, so we'll go for 450. Start there, verify and get the current actual prices. Hopefully they're not showing. We'll trade it, see what happens. Okay, so no, good. So we go to orders, there it is. See how much more quickly this works when we're not having to deal with Zoom. So we verify and trade, and that's done. We've got that, and that's done. We've got that, so we now need to put the lid on it. So I'll probably do it in there, trading, and so it's buy to open. We come 1 strike price down, so that's 18, and we offer 10%. Near enough, we'll give them 40 cents. So that's to buy the lid, which is the protective promise to be able to sell the shares at $18. But we only get it if that triggers, and it only triggers if the price for that promise comes down to 40 cents. So that's done. So 0 filled, which is what we want. Basically, this is an order that sits in the system waiting for that price to be reached or not. And so to the next one, which is TDS, Telephone and Dead Systems. Add option, sell to open. This time we want 3 contracts, and the expiry is way off into the future. I wanted sort of March, but that isn't available, so I'm having to go to May. And the strike price is $25. So no price has come up, so I'm putting $5.60 in, and I'll verify it to get the live prices. Okay, so I'm just going to go back and check on the Sapphire one. The price I was looking at earlier on was $5.60, so I'm a bit concerned that we can't actually see the live prices, but I'll use that $5.60, and that's gone through. So we need to put the lid order on it, buy to open, one strike price down, which is $22.50, and we'll give them 50 cents. Okay, so the trade's now ready, 50 cents. Click on the button, and of course it won't go through because it's a limit order, and there it is, the order is placed. So there's one more to do, which is American Eagle Outfitters, AEO. There we have it, and again, zoom in about the repetitiveness, and this we just want 2 contracts, and the expiry is February. There it is. Strike price is 33. That incidentally is why we only want 2 contracts, because 2 contracts at 33 would give us $6,600 worth if it goes and gets put to us, and that's getting towards where we want it to be. So there's a spread come up of 660 by 710. We'll try 690, see how we get on with that, and we'll trade. And filled. Might have gone a little bit light, but never mind. 690 is certainly far better than we actually started off with 660. So we just need to put the lid order in place, and that's buy to open, one strike price down to 32, and we'll give them 65 cents. Verify that and trade. And that's us done. Go back to the portfolio, just see how things are looking. So we're now up to $403,000 in cash, and we've got a net liquid value of 302,000. We need to keep our buying power above 151,000, and as it's at 290,000, we've got a lot of headroom yet, so we're definitely looking for more trades. Okay, thank you very much.